Hello and welcome to this week's Elite webinar. I'm Riz, and the day we're recording this on a Sunday instead of a Saturday. Nonetheless, quite a few things have happened since the past webinar. We took a break last week, and we are back. And boy, oh boy, quite a lot has happened from a market standpoint, from our big catalyst or big event, I should say, of course, the U.S. election. That has pretty much happened, and the market's looking forward. As you can see, uh, the election was on November 5th, to Tuesday, and then right after that, as the night went on Tuesday night into Wednesday early morning, we had a clear indication of kind of who was going to win, and well, Donald Trump is going to be the 47th president of the United States. Obviously, president-elect, the inauguration is on the the 20th of January 2025, if I'm not mistaken. And the market has taken that very bullishly, very optimistic, and has decided to gap up big the next day. I think we had like a 2.5% rise in the S&P 500 the next day on the Wednesday, and then it's only gone higher. And officially, the market touched an all-time high on the intraday of about 6,000. Yeah, the high was 6,012 that day, but it closed at 59.95. Okay, but the high of 6,000 was broken intraday. So once again, another high, a big breakout. You could see the multiple short-term supports that I still have here. I've left them up on the screen just for reference. Let me know in the comments for those that are watching on YouTube, if you would like me to keep these or maybe uh, remove some. But nonetheless, the market's breaking out, big breakout as you can see, and looks to be continuing that way quite strongly. Just keep in mind it is a bit overbought, not a bit, but in my view, it's overbought, it's overextended, and valuation multiples for pretty much most of the stock market, most stocks in the stock market are a bit lofty, a bit frothy, So keep that in mind before you consider chasing anything. Okay. Uh, with that said, flipping over to the year-to-date market sector, you can see we've got huge bump and run in communications, which is things like Apple falls in here. I believe Google also falls in there as well. We got financials also coming back strong. S&P 500 now up 26, nearly 27% year to date. Okay. With tech right there, XLK. Utilities also bouncing up after kind of lowering the past couple weeks. They have had a little bit of a tick up there as well. XLY, which is the consumer discretionary, also big run. And then I would say the laggards are quite the underperformers here. We've got XLP, which is a staples, consumer staples. We got energy, we got the real estate sector, and then we've got healthcare as well. So all above the zero line still, but those are the underperforming sectors there. Not much to be gleaned besides a lot of buying going on in terms of you know demand and euphoria, so to speak. Pretty much every sector up on the week. Of course, unsurprisingly. Okay, as we move on to the next year. Okay, here we go. We got oil here, uh, trending a little bit lower. I got rid of that channel line there, but ultimately, we do have the support area here marked still around 68, and it's kind of trending there, $70 area, because it's a Sunday after 6 p.m. Eastern futures market is open. And we have oil futures obviously trading right now. You can see um, it's 70-30. Okay. Gold, same thing. Gold also um, moving, but gold had a big drop uh, last week. As you can see, what was it? About a 2% drop, 3%, 3.5% from the highs. It actually had a pretty bearish day on Wednesday. Um, if you can see here, I don't have it. I have it as a line chart for simplicity, but the candle would have been really bad here. Very bearish candle on Wednesday post-election. Okay. Not the most surprising that we see a pullback, with markets kind of factoring in that potentially with the Trump presidency, it's going to be uh, bullish for the economy, bullish for the stock market, bullish for everything besides safe haven assets like gold, right? Flipping to the next chart here, we have the bond yield. Bond yield slipped, ticked down a little bit, but we're actually higher overall post-election, with the thought process being that, with tariffs and the kind of economic policy that we kind of saw in the last uh, Trump presidency from 2016 to 2020, we might see, I would say, a big chance of tariffs. In fact, that pretty much seems to be a large part of the policy for the incoming administration. And generally speaking, politics aside, generally speaking, tariffs are a bit inflationary. So it will remain to be seen how that kind of moves, how that kind of occurs throughout 2025. Once, we do see those eventual tariffs are implemented. Again, assuming that they are, but there does seem like a high probability of them being implemented nonetheless. We also saw last week on Thursday, uh, we got Powell and the FOMC decided to cut rates by 25 basis points to 0.25%. And that leaves one more Fed meeting for 2024 next month left. And that too, the market is anticipating another 25 basis point cut. An important thing here, even though bond yields going up, and with the rate cut, we actually had the US dollar strengthen and go up further with the Trump presidency, coming in. Usually tariffs, all that stuff usually strengthens the US dollar a bit. We know a more populism slash, insulated economy. US economy is good for the US dollar. Even though we've had rates trending down, the US dollar is kind of right back uh, to around the area where we saw before rate cuts even kicked in, right? So it's quite interesting to see US dollar index. Remember this, the US dollar index compared to other broader large currencies, uh, kind of on the uptick, and right back to where it was roughly before any rate cuts even happened this year. So very strong, very bullish in that sense for the US dollar. Now, with that said, let's take a look at the economic events coming in this week. We have on the 13th of November in the morning. It's actually supposed to be 8:30, I believe, but because we had an hour of daylight, what's it called? We removed daylight savings, so we went back an hour in time. So it's supposed to be 8:30 a.m. Eastern. Okay, so no daylight savings time. And we have core inflation coming in along with inflation rate month to month and year over year. You could see here expected to be about the same. Um, I care mostly about the core inflation rate here, not the core, but the year inflation rate about 2.6 is what's expected year over year, the annualized number. And that's trending lower, right? The previous was 2.4. Is market's expecting a slight uptick here. So that will be interesting to see if that actually pans out. We have PPI and we have the Fed Chair Powell speech on uh, Thursday as well. And again, I believe that's 3 p.m. Eastern on a Thursday. And Friday, 9:30 a.m. retail sales. So not too important. We're gonna see how the spending is going from a retail standpoint, of course, before we head into the holiday season in December. That's really, the big um, retail season, spending season. And of course, we'll get the numbers for that in January, right? Because this is for October. So those are the economic events, the big ones. And then we got the earnings calendar. Earnings season pretty much is a wrap, it's done. We have now kind of the smaller tech and more growth companies coming in. Of course, not just that, but we've got, likes of Disney and Home Depot as well. But let's run through that here. Monday, nothing really is too exciting for me personally. Tuesday, we have Shopify before open, Home Depot, of course. We have Hertz, which is the car rental company. And then after close on Tuesday, we have Cava, which is the restaurant chain, Spotify, Oxy, Occidental, which is the oil company, and we have uh, Mara, which is Marathon Digital Holdings, which is for those of you that care about crypto. And on Wednesday, nothing before the open that really strikes me, but after uh, close, we have Cisco, of course, everyone's the well-known electric component company, whether it's your routers or your uh, modems and all that kind of stuff. And then Thursday before open, of course, Disney. We got Disney, which is a big one. Um, if you really want to look at advanced auto parts, yeah, to kind of get an idea of some of the automotive sectors, we got China's JD.com, essentially the um, retailer there. And then we got Applied Materials on Thursday after close. That's going to be interesting. AST is essentially think of it like the competitor to SpaceX, and that's had a pretty strong run this year. With all things considered. And then we have OKLO, which is actually an interesting one. This is a nuclear play. There's a nuclear company, and this is actually, if I'm not mistaken, um, run by OpenAI, aka OpenAI for the ChatGPT fame, Sam Altman, right? So there's a lot of hype back in this. This one's also had a tremendous rally this year. Um, Keep in mind that it actually has not much going for it in terms of revenue or anything. It's like all hype, and obviously it's all future based, right? Recently, there's been some catalyst that there's some approvals for them to start you know, their initiatives on opening up some nuclear power plants, all that kind of stuff. So obviously it's very far away, but it'll be interesting to see what comes of this earnings report um, in terms of what's said by management, right? And then Friday we got Alibaba, of course, the kind of the Amazon of China. And that's the big one. They're wrapping it up for the week from a earnings standpoint. Okay. Let's flip back here, address any questions you guys may have. We already have one here. Um, what do I think about long calls at FCX? And then new core. So FCX, Freeport McMoran. This is energy minerals type of thing. Okay, so uh long calls, yeah, definitely quite a weird price action there on the Thursday and then Friday, right? Gap up and then gap down. I don't know if that's accurate, but seems to be. Uh, I don't know if there was any specific news around that. Whoops. Okay, there was a filing there. That's why. Okay. Yeah. Okay. So long calls on FCX, and yeah, I think that could be for the 49 target. Yep, that could be pretty decent. 49 being kind of like the high that it touched on Thursday, and I think that could definitely be reasonable if you're looking at it with 45 being kind of like a support zone, 45, yeah, 46 area being quick support. And then we also ask if Newport, this is a metal, mineral steel company. This one also moved down after gapping up on was it Wednesday? Yeah, gapped up and then kind of retraced lower. Not the most let's say, confidence inspiring price action there for the latter half of the week. But if you're looking at a 170-ish profit target is what you say. This is a bit lofty. Yes, definitely. I get it. Again, Thursdays, Wednesdays intraday high. But this can be a little bit more of a reach compared to the FCX chart, right? Because this is definitely looking a lot more bearish. We also have the next kind of, if you want to think about it as like a support, this is it right here. And then we have the rest of the gap fill here. So that's a bit risky if it breaks below, right? So something to consider, all right? As we um, keep in mind as we go into the last month and a half of the year, it is looking a bit bullish from a seasonality standpoint. Obviously, election event is done. It remains to be seen, I think, where the market settles. But again, if you're bullish on metals, then I think that's definitely not a bad play. Especially FCX, I think looks good. Nucor is a company I'm more familiar with, the one I like more. But I think that setup is better on FCX. And now if you're considering short puts, yes, definitely short puts is another, but because this is more of a slower mover, you're gonna find that the premium collected on both FCX and Nucor are generally gonna be less because implied volatility should also be less, generally speaking. And depends where you want how far you want to have them. If you want to go for 144, 145 short puts, again, depending on how far you go, you may or may not get enough premium to make it worthwhile. Okay, so take a look at that. Any other questions we've got coming in? But overall, as the year has continued, we've had quite a few of the catalyst and events come and go, right? We've had uh, the rate cuts occur, multiple rate cuts so far. We've had obviously the election. And I said before even the election happened, that the markets were pricing in a Trump presidency, and you could see that. I'm going to flip back up here to SPX. You could see that leading into the election. You could see that the markets in the previous 2 weeks before were not 2 weeks, but the previous month before, it was like just running up, running up. Eventually, we got some consolidations just the week before, because it was like, well, um, is it going to be a closer race than expected? Initially, everyone was kind of hyped because it would seem to be a bit one-sided with polling, or like especially the betting markets. But last week prior to it, we had a bit of just a consolidation, and then lo and behold, it was pretty much I would say, I think it's fair to say it was a bit of a landslide, a very divisive, not divisive, divisive too, but a decisive victory um, uh, for Trump, and the market just exploded higher. We saw that uh, last time around as well in 2016. There was an initial drop, panic drop. Let me see if I can go back here. Oh boy, quite a while ago. Let me see if I can show you. Okay, so 2016, November, where are we at here? November, there you go. So 2016, I believe November 8th was the election, right? So zooming in here, bear with me. November 8th was the election, and right here. So look at this, right? We had a big run up, then we had a big doji, kind of like a sell-off in a way on intraday, but a very indecisive candle. And then the market stagnated, and then it started running up, right? Whereas this time around, it was pretty opposite of that. It just ran up literally the day of the election. Once we got a little bit of an idea how things might go, it was off to the races after that. So quite a bit of a difference to the 2016 um, post-election date, which was the last time Trump came into office, right? So with that said, it's been quite the week. I have a question here. Again, what IV percent range do I think generally is worth to do short puts and short calls? Generally, you want to look at more than, there's no hard number because it depends on the strike. It depends on how far you go in terms of expiry. But generally speaking, 60, 70% is what you want to look for it from an IV standpoint. But again, it's not a hard and fast rule. It's not a uh, the only qualifying thing you should look at. There's more at play, but in my opinion, 60% or so higher, is definitely decent to look at shorting options, right? Whereas if you are looking at implied volatility below that, below 50%, you're looking at 40%, 30%. That means, there's not much of a reason, all things considered, to do short puts, short calls, because at that point it's just better to buy options in that sense because the implied volatility is low. Again, you have to also structure the trade right. The strike has to be uh reasonable. The expiry needs to be reasonable as well. So all those things kind of come together. Of course, the setup on the stock itself needs to be viable, right? But yeah, good question nonetheless. Again, everyone, thanks a lot for joining and the questions. Um, have a great rest of the day, and we'll be back tomorrow, which is Monday. Um, and it's gonna be pretty exciting as usual. We got a month and a half left, about a month and 20 days at the time of this recording. So before we know it, 2025 is going to be here. So with that said, have a wonderful rest of the day. Take care. Ciao.